it's Dave Barnett with the investlocalbook.com blog site. I wanted to record a quick little education video about why a small business would want to lease a piece of equipment instead of borrowing money and purchasing the equipment. And there's a lot of different people out there in the internet that will have articles or videos or information about this topic. But for me, it's quite simple. And I wrote an article about this, which you can download in my 15 free business finance article package, which is available at investlocalbook.com blog site. It's a great package. Everyone should download it, especially people that are in business. So basically, one of the resources in your business that is very scarce is cash. It's capital. And when you lease a piece of equipment instead of borrowing and buying it, what ends up happening is you can usually get the equipment with far lower or no down payment. So why is that? Number one, the leasing company, because in a lease they retain title to the equipment, are in a much better position to repossess it if you don't pay. As a result of that difference in their position, they are usually much more willing to extend a greater amount of funding versus the value of the equipment than a bank would. A bank, even if they have a lien on the equipment, might have to go through a more arduous process to repossess it. And a bank might be in a far poorer position than an equipment vendor, let's say, or equipment leasing company, to undertake the act of seizing and reselling the equipment. So leasing companies can repossess and resell equipment to try to recover losses more easily than a regular commercial bank would. As a result, they're willing to do greater sort of loan to value. The other reason why I think small businesses should lease instead of buying with borrowed money is that it forces them to recognize the value of the equipment as they're using it to produce cash flow. So I have seen too many businesses where people have bought equipment outright, paid cash and had no debt, or they bought a bunch of equipment, put a big down payment, and had a loan that was over too long a period of time. So they make a business loan over 10 years and they put in some money of their own and they buy some equipment, but the equipment wears out after 5 years, and they end up still owing money on the equipment, even though the equipment is worn out and needs to be replaced. Or they get into a business with no debt on a piece of equipment and they find that they are able to undercut their competitors and get a lot of business, and they're very, very busy and they think that they're making a lot of money, but what they're actually doing is converting the capital of their business in the form of equipment into cash. So they're milking that piece of equipment, turning it into cash without paying out its replacement value or setting aside a capital expenditure or sinking fund to replace the equipment. And what ends up happening is after the equipment starts to wear out and they need to replace it, they don't have the money to do it. And I've seen this a lot with vehicles in small delivery businesses. I've seen this in the woodworking industry. I've seen it in trucking, where people will own a truck outright and they're out there seemingly making lots of money, living the high life, and then it comes time to replace the equipment and they don't have the money. So I like leasing because it forces you to recognize the capital cost of the equipment as you're out using it to make money. I like the fact that in leasing you can get more financing, so you can usually get 100% of the value of what you're going to lease, sometimes even including soft costs like installation or taxes and things. And I also like the fact that in most leases that I've seen, especially for smaller bits of equipment under $5,000 or $10,000. They use these express programs where you easily fill out a form or a couple of documents, you send it in, and I don't know if it's because the leasing company doesn't pay attention or if they do this on purpose, but I've seen a ton of small business leases made out between the leasing company and the corporation with no requirement for the owner to put a personal guarantee on it. And if you're in small business and you have an opportunity to borrow with no personal guarantee, to me that's worth paying more for. Because I know of one case in particular where a piece of equipment was leased. It was about $18,000. There was no personal guarantee. The business was sold. The buyers were supposed to take over the lease. In the first week that they had the equipment on their own, they broke it. And then they claimed that the seller had sold them a broken machine. And what the seller did is they paid off all of their debts within the company, issued themselves a paycheck for all the money that was left in the company, so payroll plus a bonus, and then they called the leasing company and told them that the corporation had ceased operations and that the premises had been leased out by someone new, and that but not to worry, Mr. Leasing Company, we have secured your property here at our home, and you can come and just let us know when you're going to send someone to pick it up. And so basically the small business owner dodged the bullet on that whole scenario simply because there was no personal guarantee on the lease. And if they had borrowed money, number one, the bank would certainly have wanted there to be a personal guarantee on the loan. And the fact that the buyers of the business broke the machine would just open this whole legal can of worms. I mean, people would want to sue each other and all that kind of stuff. So that whole mess was kind of contained by the fact that there was no personal guarantees on the equipment lease. Now, equipment leases generally are at a higher sort of effective interest rate than loans, but I would argue that sometimes terms are more important than the price. The terms of the financing can sometimes be more important than the interest rate you pay. And I've seen examples of that all over the place, especially when you're talking about bank demand loans, when they suddenly one day decide that they're not your fan and they want to call in your entire loan. There are lenders out there who do not have open-ended demand terms. Anyway, thanks for listening today. It's always a pleasure to fill you guys in and provide information. If you want to learn more about small business, private, local investing, you should be buying and reading my book, Invest Local. It's available worldwide from Amazon and on Kindle, or instant download in PDF form from my blog site, investlocalbook.com. Thanks. Talk to you soon.